Hello everyone, I'm going to be talking about what's happening currently with pound yen and my approach to the market. So if you have any questions or comments about what I'm going to do, drop them below and let's begin. So first off guys, there is a big candle that should be very suspect or basically a good marker. And it's basically this right here. If you guys see this hammer on the daily, that's where I entered off of that buy right here. Now I entered on my other account. This is showing you guys just an example, but this right here is a good entry because usually for me when I see a hammer, it's off of like especially on the daily and pound yen, it really truly respects those candles. Let's see. So example, you see this one right here. If you entered on this hammer, you would have been pretty much up a maximum of what? 459 points on pips, my bad. And if you enter in this trade right off the open, you would be up about 125 pips. Let's see if we can find some more examples. But usually hammers are a good indicator that the market is reversing, and that's pretty much a good point. Oh, here's right here. Another hammer right here. So I entered off of here, and my expectation for the market to go to is up here. Right here. So we're looking at up to about 300 pips. Now I'm trading on the daily, so this might take a couple days, maybe a week or two to hit this point. If it doesn't, it's fine because I already locked in my trade because it's already up 100 plus pips. So usually when it goes up like 40 or 50 pips, I lock in my trade. And so if it knocks me out of my trade, I take a small profit. But if it keeps on going and hits here, then I'll make a big profit of possibly a little bit over 300 pips. So what needs to be done to ensure that is basically if you see a certain pattern, guys, make sure your risk versus your reward is far greater. So your win. So for example, here, so my win would be this green box. Delete this. And if I'm risking, you can put it even below or right here. Here, make a little bit visual for you guys. Alright. And let's make this a different color, make it red. So basically, you'd be potentially risking this area to gain a potential of this, like the maximum being this right here. And what I like to do is enter in on two different orders. Okay, so if I'm going to enter in the trade right here, right off the open off this candle, because the hammer completed right here, I enter in twice. So I have basically an order right here. And basically what happens, what I like to do is, move this over a little bit for you guys. So when it enters in the trade twice, you can have like just say 0.01, 0.01. And if we can basically put like a pending order here, put like a buy limit and modify it a little bit. And this is just an example if it was a live trade. Oh, you can't do that. Let's see. Trading, and we'll do new order, pending order, buy limit, price, we'll move it around, 0.01. Take profit, we'll say 166.035. Place. The buy limit, I'm sorry about that, 162.095. Place. So this, just imagine if we entered a buy market at that price right here. Okay. And let's get rid of this rectangle. I'm sorry, this horizontal line. Just go to objects and delete horizontal line. Delete. So basically you have this as an entry showing the green as potential gain. And we can move this target profit a little bit right here. Let's add the red in there once again. And if you visualize it, you can see that the red will be the potential loss and the green will be for the potential gain. Okay? And if you add the stop loss, we can do this right here. Stop loss of, let's say, 160.970. Hit modify. So if we look at it on a 0.01, if we're right, we make $30.97. And if we're wrong, we were wrong for, let's see, $6.36. So you're talking about almost five times the win. So this is a good win reward ratio. So basically, before entering trade, just have this set up to you so you can benefit more. And for me, I enter in twice. So if I enter it right here, I have two orders off that open off right here. And what ends up happening is when the market starts going up, I lock in one trade, move my stop loss above my entry. Once the market moves, and I move both above the entry. So if they come back down and knock out both orders, making them both profitable, but I'll allow one to hit this target profit. And my secondary position, I'll just drag up the stop loss. So if it does go much higher, just say it goes up to the let's say 168, or if we go to the monthly, even higher, right? If you zoom out a little more, I have a long-term entry right here locking in my trade, so I can let it run even higher. So if we can visualize, let's say this was the market price and it was all up here, my 0.01 would be taking home $180 for this one trade because I locked it in and I moved in at the right position. So that's how that's how I'm approaching it. If you have any comments, questions about it, just let me know. And we can talk about it. But that's the video, guys. Tell me what your guys' thoughts, and I'll see you guys in the next one.